So we're looking at part 2 of the candlestick anatomy theory, and we talked about the 4-hour candlesticks. So as we can see here, we have a daily candlestick, and the daily candlestick is composed of these 6 4-hour candlestick from the 5 to 9 p.m., 9 p.m. to 1 a.m., 1 a.m. to 5 a.m., 5 a.m. to 9 a.m., and then 9 a.m. to 1 p.m. right? These 6 candlesticks make up this one daily candlestick, creating the daily range. But we want to focus on these 4 key candles, which is the 9 p.m. to 1 a.m. EST, which we categorize as the Asia session, then the 1 a.m. to 5 a.m. EST, which is the London session candlestick, then the 5 a.m. to 9 a.m. EST, which is the New York session candlestick, and then the 9 a.m. to 1 p.m., which is the London close candlestick. And as we can see here, we have the Asia session, London session, New York session, and then the London close. And we want to go even deeper and classify the kill zones. So 9 p.m. to 12 a.m., that is the Asia session kill zone where we can look for opportunities. The 2 a.m. to 5 a.m. is the London session kill zone to then look for opportunities. The 7 a.m. to 9 a.m. is the New York open kill zone to look for opportunities. And then the 11 a.m. to 1 p.m. is the time that we look for opportunities inside of that specific kill zone. So essentially the goal is, instead of focusing on the entire daily range and trying to catch the entire daily bias, focus on the specific 4-hour candlestick relative to your specific session. Meaning, if you're trading the London session because that's most convenient for you, then you obviously want to be trading from 2 a.m. to 5 a.m. and you want to focus on the 4-hour candlestick between 1 a.m. to 5 a.m. And as you can see, each 4-hour candlestick consists of some type of power of 3, where we have the opening price followed by that low that is then created, and then we see that push to the upside, creating that high, and then following that we have this close. And we can say the same for vice versa, where we have that opening price, then we create that high, then we create that low, and then we create that closing price. So instead of focusing on catching the entire daily range, focus on catching that 4-hour power of 3 within your respective session and trade between your specific kill zone. So if we're trading the New York session, which is 7 a.m. to 9 a.m. kill zone, this is the opportunity we want to be looking for trades. And the New York session is the 5 a.m. to 9 a.m. EST 4-hour candlestick. So as we can see here, if we're trading the New York session open, we want to be focusing on the specific time between 7 a.m. to 9 a.m. relative to the New York session, which is the 5 a.m. to 9 a.m. EST candlestick. So instead of focusing on the entire daily range, let's focus on the specific 4-hour expansion relative to that New York session. And then we have that London close between 11 a.m. to 1 p.m. EST. So this is the kill zone that we're going to be trading between. And then we're looking at the London close session, which is the 9 a.m. to 1 p.m. EST 4-hour candlestick. So instead of focusing on the entire daily range, let's focus on that 4-hour expansion, either to the upside or the downside relative to that 4-hour candlestick for our specific session. And we want to be trading in our specific kill zone. Now let's get into the charts and look at some examples. Before we continue, if you guys are looking to join my private mentorship, this gives you benefits like live trading, pre-market analysis, and post-market analysis with me every single day, as well as access to my Market Maker series and Market Maker Mastery course, with full in-depth guides on everything when it comes to ICT and SMC, shared nowhere else. That's going to be the first link in the description if you guys wish to join. Back to the video. Now we're looking at our first example here, which is Euro USD, and we're approaching that London session open at around 2 a.m. here. And we have our 4-hour candlestick displayed to our right. And to get this specific 4-hour candlestick display, you want to type in HTF power of 3 and you get it right here. And then the specific settings that I'm using is the 4-hour candlestick, 0 offset, green, black, gray, check this, small. And yeah, these are the specific settings if you guys want a screenshot. So boom, we're looking at the London session. We're approaching that 2 a.m. So 2 a.m. to 5 a.m. is our relative kill zone. And we want to be focusing on the 4-hour expansion. So this is the specific time range that we're going to be looking for trades. But before coming into a marketplace looking for a trade idea, we want to identify areas of liquidity or inefficiency to create that manipulation before that expansion to the upside or to the downside. And we can see here that during the London session, we did come down into this order block level Price came down into this order block level, found some measurement of support, creating this propulsion block. Right, we can see this propulsion block here, as this could be a potential area of support here that the marketplace could potentially reach down into to then offer support to reach back up into. Looks to be these Asia session highs. So we have these Asia session highs here, and we have this Asia session order block. So coming into the marketplace here during the London session, we want to see if we can come down into this order block level, see some type of breaker structure or some type of support here on the lower time frames to then take that long back up into these Asia highs and potentially back up into these rejection blocks. Very, very solid. Let's go down to a 15-minute time frame and get more context. All right, we're down on the 15-minute time frame here, and we can identify these order block levels here as a nested PD array, which is essentially lower time frame order blocks inside of higher time frame order blocks. So this is a nested order block, as well as we can also identify this fair value gap here as a level of support inside the marketplace, which it could potentially reach down into to offer that support before reaching back higher. So obviously we have a lot of support down here. We have that higher time frame order block, which is that H1 order block, plus that 15-minute order block with that fair value gap inside of it. So coming into the marketplace here at 2 a.m., which is our 2 a.m. to 5 a.m. kill zone, we want to identify that opening price to be some type of manipulation, right? We want to see it manipulate lower back down into this level of support before then reaching higher prices. And as we can see here, we have that 4-hour candlestick to our right here, and this 4-hour candlestick is essentially our navigator throughout the London session range. So we want to be focusing on this 4-hour candlestick expanding to the upside. So as we can see here, we already created that opening price, we dropped lower, and we went back up above that opening price. So if we can see one more retracement back near that opening price, or maybe below that opening price, then that's going to be the best opportunity to then look for longs for that expansion to the upside. So let's see how the marketplace opens here. We can see here that we came back into that opening price and we dropped lower, but as you can see here, the body remained inside of that bullish fair value gap here. So as you can see, we tapped into that order block level just like we wanted, and the body remained inside that fair value gap. This is a very, very good trade opportunity. Stop loss just below this order block low, targeting back above these highs for over a 3-to-1 R. Let's see how this then plays out. We can see here, we see this initial spike higher, back up above that opening price. This is exactly what we want to see. And then price comes back up above these highs for our 3-to-1 R target. Very, very solid. We're looking at Euro JPY here, and we want to identify our kill zone, which is between 7 a.m. to 9 a.m. EST here. So this is that 2-hour window that we want to be focusing on for that New York session open. And as we can see here on the right, we have that 4-hour candlestick. So we want to be looking for trades near that 4-hour candlestick open, or maybe just below that 4-hour candlestick opening price. So we can identify this order block level here as a potential area of support inside the marketplace, where we could see a New York retracement, right? Because we did see this expansion to the upside. So we want to see if we can get a New York retracement back down into this order block level to potentially offer support for that expansion to the upside. So as the New York session opens, we want to look for some type of retracement leg for that manipulation move, for that continuation to the upside, because we can obviously see here that the London session saw this drop to the downside into this order block level. It found this drop to the downside into this order block level. It clearly found support down here, followed by this strong push to the upside. Now I want to see if we can get that retracement leg down into this order block level for that continuation to the upside. So let's go down to a 15-minute time frame and get additional context. So now that we're on the 15-minute time frame here, we can identify this last down close candle as a high probability bullish order block, because this was the last down close candle taking out this previous low. So obviously this last down close candle taking out this previous low, followed by this push to the upside. This leaves this as a high probability order block because there's probably resting orders inside of this specific level after that liquidity sweep. So obviously we want to see if we can get some type of retracement leg down here for that New York retracement. Following that retracement leg, see if we can get some type of push to the upside for that continuation off of that breaker structure. So we can see here we had that initial breaker structure. Following this push to the upside, let's get that retracement leg for a continuation higher. We can also identify this as a area of liquidity inside the marketplace. If we can get that retracement leg, let's see how the marketplace opens up. We can see here, boom, price comes lower, tapping into that order block level, which is that nested M15 order block, which was inside of this 1 hour order block, as well as we are below that opening price of the 4-hour candlestick. So this is a very good confluence. Stop loss just below that order block level, targeting back above these highs for over a 3-to-1 R. Let's see how this trade then plays out. We see that big push to the upside, and then boom, just like that, we get that strong push higher, just like so. Very solid. So obviously we can see here during the London session we did accumulate a little bit, but we did tap into this prior 1 hour order block level, followed by this break to the upside. So obviously this 1 hour order block down here, plus that 15-minute order block, as well as we were below that 4-hour candlestick opening price. So obviously the more confluences that we have stacked together, the higher the probability of the trade idea. Very good trade. On to the next example. Last but not least, we're looking at gold here, and we can clearly identify this 1 hour bearish order block as a level of resistance inside the marketplace, which we could potentially see the marketplace reach up into to then offer resistance for that continuation to the downside, because we can clearly identify that gold is in a market maker sell model. We reached higher and higher prices, but we reached a level to where we could not push any higher. So obviously the marketplace is going to start breaking lower. Let's go down to 15-minute time frame and get additional context. So down on the 15-minute time frame, we can also identify this 15-minute bearish order block here as a nested PD array of a area of resistance inside the marketplace. So we want to see, as we open up here for that 4-hour window, we want to see if we can get this manipulation move to the upside, followed by a break lower to then see that continuation to the downside. As well as we do have this 4-hour low here, which is a level of liquidity, which we could see the marketplace reaching down into. As well as we do have this high here, which is the previous 4-hour high, which is just inside of this 1 hour and 15-minute order block level. So obviously this is clear inducement inside the marketplace. So we want to see a liquidity sweep, as well as tapping into this higher time frame bearish PD array. This creates the highest probability setups. And then if we can see that displacement to downside, that's overall our confirmation for that continuation lower. Let's see how the marketplace opens up here at 9 a.m. All right, so we have that opening price here. All right, so we reach up into that bearish order block level, as well as we do take out this previous 4-hour high here. So I want to take my short as price taps into this level. Stop loss back above that bearish order block here, targeting back below this low for about a 3-to-1 R. Let's see how this then plays out. And just like so, easy as pie. So obviously we came into that 9 a.m. opening price, and we wanted to see that initial manipulation to the upside into this area of inefficiency, which was that 1 hour and 15-minute order block, as well as we did take out liquidity, so even better. So we had that manipulation move as the 4-hour candlestick opened up. We had that manipulation move, and then we saw that distribution to the downside, targeting back below these lows. Very solid. So that's gonna be it for the video. I hope you guys got a lot of value out of this. If you guys want to support me further, make sure you guys hit that like, subscribe, and comment what you guys want to see next. I'm Arkham. Be safe.